Tax season is officially open. On January 26, 2026, the IRS started accepting and processing federal individual income tax returns for tax year 2025. That sounds simple, but the part that matters for your wallet is what happens after you hit submit. By the end of this video, you will be able to answer two practical questions without guessing. First, is your refund likely to land in a normal timeline? Second, if it does not, what to check, what it usually means, and what to watch next. Picture someone waiting on a refund to cover next month's rent. Rent is due in about 2 weeks. They are not trying to optimize a spreadsheet. They just need to know if the refund is a real plan or a risky plan. Start with the baseline. The IRS says most refunds are issued in fewer than 21 days, and filing electronically with direct deposit is still the fastest path. That does not mean 21 days is a promise. It means the normal path is fast when the return is complete and nothing triggers extra review. Also, it helps to zoom out and remember scale. The IRS expects around 164 million individual returns for tax year 2025 ahead of the April 15th filing deadline. So even if everything is working, there are weeks where volume alone can slow down acknowledgments and updates. Here is the clean way to think about the timeline. Your return goes through 3 broad moments. First, it gets accepted for processing, which is basically the IRS saying the file format works and it can start. Second, it gets processed, which is where the IRS checks what you reported against information it receives from employers and payers, and it runs filters that look for errors and fraud patterns. Third, if you are due a refund, it gets scheduled and sent. If you are the person counting on that rent money, the difference between accepted and sent is the difference between calm and panic. The mistake is treating acceptance like it is already on the way to your bank. And to be fair, the wording makes it easy to assume that. Accepted sounds final. It is not a bad sign. It is just not the finish line. A quick hypothetical can make this click. Imagine you are due a $2,000 refund. You e-file and get an acceptance message the same day. In your head, you might start spending that $2,000 immediately. But the acceptance message is more like your file entered the building. The part that determines your deposit date is later, when the return is processed and then approved for a refund schedule. So, what should you watch instead? I'm going to give you exactly 3 signals, and each one has a clear place to look, a direction that matters, and a normal lag. Signal 1 is your e-file acceptance message. Where to look is your tax software or your preparer portal, usually a confirmation screen or email that says your federal return was accepted. What it means is, the IRS took the file into processing. It does not mean a refund is scheduled. Timing-wise, acceptance can happen the same day, but in heavy weeks it can lag by a day or 2 because of volume. Signal 2 is your IRS refund tracker status. Where to look is, where's my refund on irs.gov, the IRS To Go app, or your IRS individual online account. What direction matters is when the status moves from return received to refund approved, because approval is where a date typically appears. The lag is that you can see no change for several days while the return is processed, and then see a jump. Signal 3 is your bank deposit, but with a rule. Where to look is your bank's transaction history, not just the available balance. What direction matters is a pending ACH credit or a posted deposit that looks like a tax refund. The lag is that even after the IRS schedules a refund, your bank can add a short delay based on its posting rules, sometimes a day or 2. If you keep those 3 signals straight, you stop spiraling over status words that sound official, but do not answer the timing question. Now, 2 common assumptions that usually create stress. The first is, filing early guarantees the fastest refund. Filing early can help, but accuracy and matching matter more than the calendar. If you file early with incomplete information, you might buy yourself a delay. The second is, my software says accepted, so I should see money next. What is usually happening is the IRS has your file, but it has not finished the matching and review that turns a return into an approved refund. One more practical note about the tracker, because this is where people lose hours. When the IRS tracker says your return was received, that is the system acknowledging it has your return, and it is in the processing flow. When it says approved, that is usually the moment a deposit date becomes real. And when it says sent, that is the IRS releasing the refund, after which the remaining delay is mostly your bank's posting time. If the tracker says it is still processing and it has been a while, that line does not tell you what is wrong. It just tells you it is not done yet. The useful move is to pair that message with the three signals. Do you have acceptance confirmation? Did the tracker ever show approval? And do you see any pending deposit activity at your bank? For our rent example, that sequencing matters. If you are at received and still processing, you treat the refund like a maybe. If you are at approved with a date, you can start planning the rent payment around that date, plus a small cushion for bank posting. So, for our rent example, here is the practical translation. If you are only at acceptance, plan your rent like the refund is still uncertain. If you are at approval with a date, now you can plan around a real calendar. Next, we'll talk about what pushes you out of the normal timeline, what the IRS is changing about refund delivery this season, and the quick checklist that prevents the most common avoidable delays. Now, let's get specific about what pushes you out of the normal timeline, because that is the whole game if you are planning around a refund. There are normal delays, and there are built-in delays. A built-in delay is when the IRS is not allowed to send certain refunds early, even if you filed on day one. If you claim the Earned Income Tax Credit or the Additional Child Tax Credit, the IRS says it cannot issue your refund before mid-February by law. And it is the whole refund, not just the portion tied to the credit. This matters for our rent example. If rent is due in 2 weeks and you're filing in late January, a refund that includes one of those credits is not a safe plan for that rent date. It may still arrive quickly later, but there is a legal hold you cannot speed up. The IRS also puts real dates on this so you can use a calendar instead of hope. For returns that claim EITC or ACTC and choose direct deposit, the IRS expects most of those refunds to be available in bank accounts or on debit cards by March 2026, assuming there are no other issues. It also says the Where's My Refund tool will provide projected deposit dates for most early EITC or ACTC filers by February 21st, 2026. So if you are someone who claims those credits, your timeline is not 21 days from filing. Your timeline is mid-February earliest, likely late February to early March, with the tracker giving you a projected date around Feb 21 if you are in the normal flow. Now the normal delays. These are not punishment. They are just what happens when something does not match cleanly or the system needs more review. The IRS says refunds usually take up to 21 days for e-filed returns, but it can take 6 weeks or more for returns sent by mail. And it can take longer if your return needs corrections or extra review. That is why the I'll just mail it choice can accidentally turn a short wait into a long wait, especially if you are relying on the money for a specific bill date. It's not that mail returns never work. It's that the timeline is less predictable. Here are the most common triggers that can push you from normal to slow, explained in plain English. 1. Information mismatch. If your return says you earned X, but an employer form or payer form says something different, the IRS may need extra time to reconcile it. That can happen even when you did nothing wrong. It can be timing, missing forms, or corrections on the payer side. 2. Identity verification or fraud filters. The IRS runs anti-fraud screening. If something looks unusual compared to what it expects, a return can get pulled for extra review. That does not automatically mean a problem. It means the automated path slowed down. 3. Bank details errors. If the routing or account number is wrong, the sent step can fail in a way that creates extra steps, which is the opposite of what you want when you're counting on timing. Now let's talk about a change that matters this season, because it affects how you receive your refund, not just when. The IRS says it is phasing out paper tax refund checks, tied to Executive Order 14247 about modernizing payments. The practical translation is that more taxpayers will need to provide routing and account numbers for direct deposit rather than expecting a mailed check. This is not about how you file. The IRS says filing tax returns itself is not changing. It is about how refunds are issued and how payments are made. So, if you have always gotten a paper check, this is the season where you want to pay attention to the refund delivery method you select and whether your bank information is correct. Now bring it back to the rent example, because this is where a lot of people get burned. If you are counting on a refund to cover a fixed deadline like rent, your safest move is to treat the refund as a bonus until you have Signal 2 moving to approved with a deposit date, and you have confirmed the delivery method is actually workable for you. That is not telling you what to do. It is just matching certainty to commitment. A vague processing status is not the same as a calendar date. Here are simple decision rules you can use without being a tax expert. If you are less than 2 weeks from a major bill and your status is only received or processing, treat the refund like a maybe. Options include paying that bill from other cash, requesting more time if the biller allows it, or using a short-term bridge you can handle if the refund takes longer than expected. Each option has a cost. The point is, choosing the cost you can live with instead of being surprised by it. If your status shows approved with a deposit date, now you can plan around a real date. Still allow a little buffer for bank posting because the IRS sending money and your bank posting money are not the same moment. Now, the promised 2-minute checklist. These are fast checks, not do more homework. 1. Confirm your refund delivery method and your bank numbers, especially if you switched accounts recently or you normally get a paper check. 2. Check your filing confirmation for acceptance. If you don't have that, you are not in the processing pipeline yet. 3. Use Where's My Refund or your IRS online account for status, and only react to changes that matter, like approved and an actual date. 4. If you claimed EITC or ACTC, put February 15th and February 21 on your calendar as do not panic before this. Then use the March 2 expectation as a loose planning point for direct deposit if there are no other issues. 5. If you are worried about identity theft, consider an IP PIN. The IRS describes an IP PIN as a 6-digit number that helps prevent someone else from filing a return using your information, and it's available through your IRS online account during a specific window. Now, a final clarity pass for the viewer who just wants the mental model. The return can be accepted quickly and still take time to process. The tracker can sit still for days and then update. And a refund can be scheduled and still take a short extra beat before it shows up at your bank. So what changes for our rent scenario? If you filed and you are only at acceptance, rent is still your problem to solve with existing cash flow. If you are at approved with a date, you can plan rent around that date with a cushion. If you claimed EITC or ACTC, you plan rent knowing there is a legal hold through mid-February, and you use the tracker's projected date around Feb 21 as your first real calendar clue, with most deposits expected by early March if everything else is clean. That is the difference between waiting and watching. Waiting is staring at a status line. Watching is tracking the 3 signals, knowing the one built-in delay that applies to millions of families, and making plans that match the level of certainty you actually have. If this helped, subscribe to the Wealth Blueprint for more clear money breakdowns, and leave a comment with the next topic you want covered, or the one part of today's video you want explained even simpler.